Alrighty. Alrighty, I'm all set up and ready to roll. Hey, Mikey G, how's it going? Hey, Russ, what's happening? Hey, JC, do you want to come in and say hi? Brent's here. Rocco's here. No, you don't want to come say hi, JC? Asking the princess if she wants to say hi. All right. Rocco, did you chug a coffee? No, I did not. Yeah, I got a haircut today. We're getting a little too unruly. What is going on with Siri? Well, let's take a look at it. Happy Friday. How did you do this week? Believe it or not, Mikey, I haven't even looked yet. Totally honest with you. I sold 2 positions. Macy's and MPW. Those ones are going away. So I'm going to carry AEO, Bitto, Lowe's, Marathon, and Win into next week. So I sell 2, and I take 5 into next week and see what those numbers look like next. I know I got over 1%. I mean, I got 3% alone just from Macy's. That was crazy. Thought you were visiting family. I am. I'm down there hanging out with family. Hey, Doc, how's it going? Doc, you should see the size of this thing. It's freaking huge. Big, huge knot right there. But I can move it. It's been over a week and a half. So I don't feel. Can't move it too much, though. All right. All right, so let's just get started with this. Let's get started with the 2 I got rid of today, Macy's and MPW. Okay? That way you have a better idea of what's going on. If you know you're going to have to hold a share, do you sell another call on Friday or Monday? Monday. Age, I'm 60, honey. Gerard. I was talking to a gentleman today. He's 72. Doesn't have to work anymore, but he keeps working anyway. All right, Jerry, is it true that all stocks will be going down for the next few months? Jerry, you know what? The more people say that, the more it's going to happen. If it goes down, it goes down. If it doesn't, it doesn't. The idea here is to get a safe, predictable, consistent 1% per week. Use the only company that continuously increase their dividends. So if the stocks do go down, at least we'll get higher and higher dividends every year. And the numbers are going to change every week. So we'll see what happens. It's the best we can do. Simply Jordan, share the live, share the love. Why not Friday if you know you're going to hold it? Well, usually, Rocco. All right, Jerry, hold on a second. Okay, so which ones should I buy? Ooh, that's a tough one there, Jerry. All right, Rocco, this question's for you. Why not on Friday? Well, see all the positions I have? I sell the options on Monday. When I sell an option on Monday, it expires Friday afternoon. I cannot sell another option while one option is already open. I have to wait to close one before I can open up another one if I'm going to carry it forward. Tony does what? 50% of my work is trying to explain to the IRS what a profit loss statement is. I like that one. What is a profit loss statement? Hey, I didn't make any money this year. What do you want from me? I say that to them every year. Actually, I canceled my subscription years ago, so I have helped the IRS for decades. Why do you have to wait? I can keep selling the option. The IRS and DOJ are so annoying as they are. If you have enough money to gamble, which this is all it is, okay. I'm not 100% sure if I would want to call it as gambling. Okay, gambling is when you don't know what the outcome is. Okay, I have a good idea what the outcome is going to be because I've been doing it long enough. Also, companies that I look at have been in business for over 100 years. I really don't see them going out of business. Fascinating football. You want to take a look at JWN, cool bean. But John Keller, okay, seriously, I don't consider this gambling. Okay, if you know what it is you are doing, okay, say whatever you do, I have no idea, seriously. If I wanted to be a brain surgeon inside operating someone's brain, that's risky, that's gambling. If I wanted to, bet football or bet tennis, or bet on golf, or bet on any kind of sport, that would be gambling because I have no idea what I'm doing. Or should I just buy O stock? Ugh, Jerry, please. We'll take a look at O stock and I'll tell you why that's a bad idea. How much would you say you lost before you got good at it? Over 100,000. I trust your technique, but it's still gambling. All right, Mikey, everyone has their entitled to their opinions. Okay, so if I do this consistently for 15 years, and I've watched the stock for 15 years consistently every single week, yes, life is a gamble. If I watch it every single day, because basically you could go back. I'm going to open this up real quick so you can see. This is my website. Right here is my podcast. All right, so here's my podcast right here. This is going to pop up any second. Hold on. Now, for those who don't know, this screen here, this screen right here that I'm touching, that is live on YouTube. So you can go onto YouTube and watch the screen live. That way you can read the words a little easier. But this is my Dividend Stock Talk podcast. Okay, you'll see there's close to 900 of these podcasts. Why? Well, because I've been doing a live podcast every single day for the past 4 years. Okay, every single day for the past 4 years. So that's quite a bit. Okay, so I know what I'm doing. I just can't help people doing what they want to do. Okay, I can't help people with what they want to do, and for me, I don't consider it gambling. But if I was going to do something I didn't understand, that would be gambling. I'm just confused about which stocks to buy. Jerry, it's really not that difficult. Okay, seriously, it really, truly is not that difficult. Okay, number one, never buy something you do not want to own. Okay, don't buy something you do not understand. Don't buy something that someone else tells you is a good deal and you know nothing at all about the company. You've heard about Ford, you've heard about General Motors, IBM, AT&T, Kimberly-Clark, Wells Fargo, Bank of America, Citibank, MasterCard, Visa, AT&T, T-Mobile. You've heard of all those companies. You know who they are and you know what they do. Okay, so companies that you never heard of, like Bitto or AEO, those ones I wouldn't expect you to do because you don't know anything about them. So don't ever do something you have no idea what it is. It's really not that difficult. If you're in construction, well, you know what Home Depot and Lowe's is all about. General Motors, Ford, if you're a car guy, you know these things. If you like electronics, then you know IBM, you know, hey, share the coffee with jelly beans. All right, that's cool. I get posts. I got 5 different cameras rolling, so I get different posts from different places in the world. Anyway, so it really shouldn't be that difficult, Jerry. Seriously. Okay, you know Ford, General Motors, IBM. Ooh, hold on a second. Let me pull up something real quick and show it to you. See if this helps you out a little bit. We're going to go to the Market Watch, and then we're going to take a look at a list of companies. Come on. Let's populate. There we go. All right, see all these little green dots right here, Jerry? Okay, all these little green dots. All right, they represent a good quality company. How do I know? Well, Jerry, I'm going to tell you about O in a couple seconds. All right, just hold on a second. I am going to go over O because you're not the first one who asks me about that. I get asked about O about 3 or 4 times a week. Okay? Now, every one of these dots every one of these dots represents a company that you probably heard of. And if you haven't heard of it, I'm sure you've heard of Warren Buffett. These companies are owned by Warren Buffett. They just happen to be in this calendar because it tells me when they pay their dividends. GM can't be a dividend king. They went bankrupt in 97. Yeah, I'm well aware of that. I didn't say that GM was a dividend king. Tony does what? Unity is a good cross-platform game engine, but has no dividends. Okay, Tony? Ben, do you invest in royalty trusts? No. GM, I like money. Ooh, I like money too. Okay, so anyway, let me read these to you. These are Warren Buffett's holdings. Okay? American Express, MasterCard, Bristol Myers Squibb, Verizon, Globe Life, U.S. Bank, Mendelez, ITOC. I don't know what this one is. Seriously, I have no idea. This is on Warren Buffett's list. This is Warren Buffett's list, so I have no idea what this one is. Okay? AbbVie, Procter & Gamble, Bank Mellon, Ally Bank, Aon, Wells Fargo, Siri, DHI. Most likely you've heard of Warren Buffett. Those are his holdings. They got nothing to do with me. I just look at when they're paying the dividend. Because what I have found out after all my years of trading, if I buy 2 weeks before the EX dividend date, okay, the 28th, I'll be looking at it the Monday of the 10th. Okay, I want 2 weeks for this thing to move because stocks have a tendency, especially good quality stocks, have a tendency to move up just before the dividend's paid. And the green dot represents when the dividend is getting paid. There's 4 dates you need to remember. Okay, date of the announcement date. That's when the company tells you when they're paying. Second date, the EX date. That's the last day the stock trades before the dividend's paid out. Third, the most important one, is the date of record. Whoever owns a stock on the date of record is entitled to the dividend. So you have to buy your stock on or before the EX date. It's the second date in order to qualify for the dividend. And 4 is the payment date when you actually receive your money. So I missed a couple of questions. Let's go back here. So are you promoting selling call premiums? Well, kinda. I'm not really promoting anything. I'm just telling you what I do. Okay, I don't tell anybody what to do. I found an interesting loophole that seems to work out just fine. Safe, predictable, consistent 1% per week. It works out very lovely. So why not continue to do it? Now, I came up with it in 2008, okay, 2008, when my daughter, when she was 9 at the time, she wanted to learn how to trade like I was trading. Well, I had a little bit of a challenge. Who said, Chevrolet, how do you, nice to see you again. The challenge was teaching a 9-year-old how to trade. It had to be simple. It had to be safe. It had to be predictable, consistent, and no possible way she could lose. Okay, so that's the 5 criteria. We all want that. Okay? So, the 5 rules. Never buy something you do not want to hold long term. Okay, I mean, don't buy it. If you don't understand it, if you don't know what the company does, if you've never heard of them before, don't do it. There are too many good companies that fall into this category, safe, predictable, consistent, 1% per week. Why buy something you don't understand? Don't do it. That's my humble opinion. What the hell do I know? Well, listen to me. Well, do your own research. But have you heard of all these companies? Bristol Myers Squibb, Verizon, AbbVie, American Express, MasterCard, Procter & Gamble, Bank Mellon, Ally Bank, Aon, Wells Fargo, Siri. You've heard of all of those. Hey there, thanks for sharing. Papa Breezer, how you doing? We aren't trading for 1%. Colton. All right, well, Colton, you're not trading for 1%, then you're in the wrong place. Because Colton, that's the only thing I'm teaching. Okay, I am teaching safe, predictable, consistent 1% per week. That's over 50% per year. I can't help you if 50% per year is not enough for you. Okay, so I'm retired, which means I have to live on the money I have or go back to work. Don't get me wrong, I could go back to work if I want to, but I just retired in November. Okay, so do I really want to go back to work yet? No, not really. I kind of want to play this out, see how this comes along, because I'm kind of enjoying myself. I get to interact with a lot of people. I get to talk about a topic that I'm passionate about. I love the idea of trading and making 1% every week. I love it. And a lot of people out there in the audience, they apparently like it too. Now, we do have a small group that we've gotten together every morning. We do our personal trades. Okay, it's on here. I just show you some of the rough stuff. Okay, but I do have a personal trading group we trade every morning. Julie's here. How did any of the calls expire today? I had 2 of mine. What did I do for work? I did manufacturing and I did service work. I was actually a waiter, and I owned a manufacturing company. I owned a manufacturing company for years, got divorced, and I went to waiting tables. I enjoyed it. I actually enjoy talking with people. All right. So what did calls expire today? Well, the calls that expired today was Macy's and MPW. Those are the only ones that I sold this week. Granted, I'm taking the other ones into next week. I will probably, more than likely, buy more of both of those on Monday. Mobile Notary S. Postal Carrier, monthly or quarterly dividends. Well, the thing is with companies that pay dividends, some pay once a year, some pay twice a year. Some pay 4 times a year. Some pay every single month. You really have to decide what it is you're looking for. Personally, I like the ones that pay quarterly and have 20 years of increased dividends. JWN Coles. Well, let's take a look at JWN Coles. I'm going to write it down in my book. My book. JWN Coles. We're also going to look at Macy's and MPW. Okay, I like those four for next week. Been getting more than 1% for 7 weeks now. Thanks, James. Hey, Russ, not a problem. Glad you're liking it. Jerry, Notary Carrier Zero is nice because it has monthly dividends and consistent good. All right, Jerry. Now, somebody wanted to talk about O, so before I do anything else, hey, Mikey P and Neg. All right, let's go over O first because I want to show you what I'm thinking about it. Sandy, I'm new. Robinhood has me trapped. Can't figure it out. Sandy, really? I love Robinhood. It is so awesome. It's so simple. Really, Sandy, send me your number. I'll give you a buzz. I'll walk you through it. It's really not that difficult. GOLS. God bless you. Okay, GOLS. I like it. All right, we're going to take a look at O, which is realty income. Only because I told someone we'd take a look at O this morning, and I'm telling him why. I'm going to go over O and tell you why I don't like it. Okay? Let's take a look at it. Now, O does pay a monthly dividend. Okay? O does pay a monthly dividend every single month. It pays you once a month. What is the dividend? Well, the dividend is 25 cents. All right, so we want a 25-cent dividend. Let's put it up here in the trade grid, see what it all looks like, see what we're all clamoring about. Okay, so here we are. We're looking at O's. Remember, they have 25-cent dividend on a monthly basis. Hello, Costco. They pay 4 times a year. Yes, I'm aware of that. We'll take a look at Costco, CSCO. CSCO. It's not Cisco. That's not Costco. That's Cisco. Costco. What is Costco? I don't buy it. How does Nike look? NKE. All right, we'll take a look at Nike in a little bit. Let's stick with O at the moment. Okay. COST. All right, thanks, Chevrolet. COST. I'm about to show Jerry why I don't like O. Okay, number 1. Roger, thank you for looking at Costco. We'll take a look at Costco in a little bit, all right? But it's going to take me a while to get to it because we have a couple other stocks ahead of it. Okay, so I'm going to go a little bit of time. The more you guys throw up questions, the slower it goes because I have ADD. So anytime I see that screen move, I have to come over and take a look at it. All right, so looking at O, realty income. Number 1, I can buy it first thing Tuesday morning. Now, no trading on Monday, so it's going to be Tuesday morning. 52.52. The 52.50s are going for 60 cents a share. So you know what that means? That means that's over 1%. Cool. Awesome. All right, Art. Coca-Cola has absolutely horrible premiums. They've never, ever, I've never bought Coca-Cola. Never. Because the premiums, because if I'm buying the stock, the premium is 0.5% per week. Will you be looking at Amazon? No. Amazon does not pay dividends, so it's a no. Any company that doesn't share its profits. Give me 1 second. I need to grab a fan. You done in here? It's kind of warm in there. Oh, shit. I probably should lift that arm. All right. Note to self. Don't lift the arm. TWO. All right. Where was I? Go back. Thanks. Good to know. Okay. Amazon. Yeah. All right. Ed. I don't do Amazon. I don't do any company that does not pay dividends. I don't even bother looking at. Because if I'm investing my hard-earned money into a company, I would like to get some kind of profits back. I'm not looking for capital appreciation. I don't want to put, $100 per share into a company, $200 per share, whatever the amount is, and then have to wait 3 to 5 to 10 to 15 years in order to collect any money out of it. No, I'm retired. I need consistent, predictable income, preferably on a weekly basis. That way, that's why I never look at monthly options. Never. I'm just looking at this one right now because I want to pick on Jerry for a little bit. Jerry said I could pick on him. I don't look at monthlies, okay? Because that means I can only write a covered call 12 times a year. Okay, so I can write a covered call 12 times a year. They pay a dividend 12 times a year. But let's go a little deeper into the numbers, all right? Now, I don't look at Amazon because Amazon doesn't share their profits. Neither does Tesla. Oh, it has been trashed the last few months, and I'm holding only 3 shares at this point. All right, Mikey. Okay. Whoops. Can you talk about covered calls on your dividend stocks? Yes, I will. I'm going to get to that in a little bit. Right now, we can cover O. I got to go over some of these questions. Everything you said about O makes it sound amazing, though. Jerry, I haven't got to the good stuff yet. Hold 1 second, Jerry. All right. Do you have research to see if the company shares? Paul, I don't know what that question was because it almost sounds like half of a question. All right, so far, realty income. Oh, all right. Now, I like to collect, so we get this understood right up front. I like to collect a safe, secure, predictable 1% per week. That's over 50% per year, okay? You get the commissions and all that kind of crap and the taxes and all that kind of bullshit. It's all about 50% per year, okay? 50% per year, all right? So let's look at O. O has monthly options, which means I can only write a covered call 12 times a year. 12 times a year. Look at the number I'm getting, 52.52. The 52.50s are going for 60 cents. That's just barely over 1%. So let's take out our calculator, find out exactly what it is. I don't need it that big. I don't need it that big either. That looks about big enough. All right. All right, so I can buy it first thing Tuesday morning, 52.50. The 52.50 is going for 60 cents. If I take 60 cents, divide it by the purchase price, which is 52.52, 52.52, it's going to give me a grand total of 1.1%. See that? 1.1%. Now, if you can't see these numbers very good, okay, this screen is live on YouTube, so you can go to YouTube and find that at one time. Mighty KC, yes, you are correct. It is over 60% per year. Dividends are probably the stupidest. I love negative people. William Montgomery. I love people that are negative. Sorry, do you have the research company that gives dividends? Don't need to. William Montgomery. Dividends are probably the stupidest way to make passive income. It would take $1.75 million to replace $80,000. Wow! I love hearing from people that are so brainwashed they're not able to look at a possibility that could be anything different than what's being stuffed down their throats by the powers that be. Seriously, dude. Okay, if I can show you safe, predictable, consistent way to get 1% per week, okay, that 1% per week comes to over 50% per year. And if you want $80,000 a year, you need $160,000 to get $80,000 a year at 1% per week, not 1.75 million. All right, let me go. Keep going. Mighty KC 1 point. Yes, you are correct. It's like 62, 67. I think it's around 62% per year compounded. Okay, Mikey, call. Keep watching. Show you the dividend gold lists at some point tonight. Yep. More questions. Please prove me wrong. Hey, William, just sit tight. I'm going to get to it in a second. Right now, I'm picking on Jerry. Let me pick on Jerry first, and I'll get to that in a second. One of the screens on YouTube is not showing the screen. All right, I'm going to take a look at that for a second. This one here is working. What do you mean dividends are one of the best things because your trade goes wrong? You stop dividend. Right, Nick the Bull, you're correct. So let's take a look. He said one of the screens on YouTube It's not working? Oh yeah, look at that. All right, display capture. Okay, get rid of that one. And let's find a new one. Display capture, there we go. Okay. Okay. Boom, there we have it. All right, let me know if that works. Okay, so Jerry, back to picking on you. You ready? Okay, so I don't like monthlies because I can only write a covered call once per month, which is only 12 times per year. So if I do it on this stock right here, on Realty Income, check it out. 5250, the 5250s go for 60 cents, which is 1.1%. I can do that 12 times. So let's multiply it by 12. Multiply it by 12. That comes to a grand total of 13.7. You might be excited about 13.7, but let's go a little bit deeper. You ready? We're going to go over to Yahoo Finance. Okay, we're going to go to, here we go right there. It's already pulled up. How far back has O been paying dividends? Wow, it goes all the way back, doesn't it? Oh, 2006, 2005, 2004, 2003, 2002, 2001, 2000. Okay, check that out. Since 1999. January 1999, O, which is Realty, has been paying out a dividend every single month. Okay, well, let's check out something. 1999, it was 8 cents. 2000, it was 9 cents. 2001, it was 9 cents, no increase. 2002, 9 cents, no increase. 2003, no increase. Halfway through, they go up to 10 cents. 10 cents, 2004, 11 cents, 2006, 7, 8. 8 was 13, then jumped to 14. 2010, nothing, 14, 14. Finally changed to 15, 2012. So that's 4 years it didn't change. 2012, 18. 18 for a long time. Then the 19, then the 20, in 2017, 21 in 2018, 2022, then 23, 25, then it's at 26. Nice. Okay, so they're paying a nice monthly dividend. But what did that monthly dividend come to? Okay, let's go to a summary. Okay, so here's the summary, 5218. All right, are you ready for this? The dividend yield, 5.91%. Okay, Jerry, you hearing me? They pay you they pay you a dividend every month. Okay, great. Okay, they also have monthly options. Okay, double great. Look at the return you're getting. If I put my money into O and continue to get dividends every single month, I'm still only getting 5.9% for the month, for the year. That's for the year. I'm showing you ways to get 1% per week. 1% per week comes to over 50% per year. You put your money into O, it's paying you 5.19%. Okay? So, and I don't like the, what do you call those thingies? Monthly options. Okay? Because I showed you the numbers. If I buy it Monday, 52.50, the 52.50 is going for 60 cents, which is 1.13, something like that. Okay? However, that is for 4 weeks. So I would have to take that 1.1% and divide it by 4. So now I'm getting 1/4% per week. Why the hell would I do that? Seriously. Okay, number one, it's paying you just around 6% for the year. So it's a 6% yield per year. Okay, hang on a little bit longer and you'll see where some of the stocks that actually pay over 1 to 2% on a weekly basis. Okay, so let's move on. Let's move along. All right, one of the screens on YouTube. Okay, Chevrolet, hoping that fixed that problem. Okay, now we had a couple we wanted to take a look at. Although, anybody want to hear the although? I already did the although, didn't I? Can you explain why some tickers are such high yields? Zim. Yes, it's working now. Okay, great. You know where you want to finish your point. Thank you. How do you feel about SCHD? Oh, really? Ed. SCHD and SPHD are basically the exact same. as O. Okay, SCHD. Whoops. SCHD has monthly options. Okay, monthly options means I can only do it 12 times. And if I'm only getting 1.5%, that means like the maximum I can get out of this company is around 18% per year. Okay, you might be okay with that, but I'm not. All right. So SCHD, that's not the only thing about SCHD I dislike. SCHD. Okay, here's another thing I don't like about SCHD or SPHD. The yield, 3.47. 3.47. You can put your money into a CD or a government T-bill and get 5%. Why the hell would you give it to a computer? Because that's what an ETF is. An ETF is basically a computer-generated program, electronically traded funds. Electronically traded funds. So why would you give your money to a computer? The computer's going to give you 3.47. Yeah, so sorry, Ed, I don't like those. What do you mean? Okay, ignore A1 switch point. Okay, yes, that's working now. Can you explain why some tickers has such high yields? Well, because they're trying to suck you into buying crap. Zim is the same way. I don't like Zim. But I don't do covered calls because I don't understand what they are. Well, Jerry, good thing that you're here because I'm about to explain to you what they are. They're very simple. All right, realty income is one of the safest bets for young investors. That O dividend will compound over time. Those aren't dividends, those are distributions taxed differently. He's correct about that one. So, Mikey, I showed you the numbers, Mikey. I did. O pays 6.5%. 6.5% for the year. Let's go back to there. All right. So if you like O paying 6.5% per year, how long is it going to take you in order to double your money at 6% per year? Seriously, think about it. How long would it take you to double your money at 50% per year? And what I'm showing you was created for a 9-year-old. It was simple, safe, predictable, consistent, and no way to lose. And number one, never buy something you don't understand. Number two, never sell at a loss. Number three, make sure there's 20 years or more of increased dividends. Because because stocks go up, stocks go down, stocks go up, stocks go down, stocks go up, stocks go down. That's all they do. When the stock goes down, I want to be reassured that I'm getting a higher dividend every single year. Now, O does not do every single year. They do it when they feel like it. I showed you the history on O, and yeah, it's over 20 years, great, but it's not consistently increasing every single year. And the yield they're giving you is 6.5%. If you're okay with 6.5%, this ain't the right place for you. Seriously, it's not. This is safe, predictable, consistent 1% per week. And O, I just do not do. I don't do CHD. I don't do JEPI. I don't do any of those ETFs, especially not in this trading strategy. So let's go on. Let's continue forward. Fascinating football videos. You want to take a look at Hormel, HRL. Stocks are so confusing. Jerry, really, they're not, dude. Someone has been lying to you. Hold on one second. Fascinating football videos. I'm going to write Hormel down. HRL. Now, Jerry, this is for you. HRL. That's Hormel. I'm sure you've heard of Hormel. They make chili. Famous Hormel chili. They've been making Hormel chili for over 100 years. Okay, what is difficult about choosing a company like Hormel? You know what they do. Ooh, that one turned off. Why the hell did this one turn off? Oh, I gotta switch it out. This one needs the fan, because without the fan it overheats. Okay, so let's get this one back over here. Oh, hold on, guys. I gotta get this YouTube up and running again. Yeah. Resume. There we go. Hey, Mike said hi. There's black screen on the other YouTube. Sorry about that. Well, we'll try to figure it out. Okay, so Jerry, hope you understand that. Now, certain companies, they're called dividend kings. Hormel is one of them. HRL. Okay, Hormel, Home Depot, Lowe's, Coca-Cola, Pepsi, Wells Fargo, but no, not Bank of America. Anyway, there's about 60 companies, 67 companies that have increased their dividends for 50 years or more. Okay, that can't be confusing to you. Let me read off some names for you.
Let's read off some names.
Okay, let's read off some names real quick. Okay, Jerry, this is for you. PPG. You may or may not heard of PPG. They've been in business for quite a while, over 100 years. They have increased. Every single one of them I'm going to name has 50 years or more of increased dividends. Okay, Emerson Electric, over 100 years old. 3M, over 100 years old. They may or may not have recently changed their dividend payments because I do know they split. They split off the company, so I'm not quite sure how to handle that one. Target, Johnson & Johnson, Pepsi, Kinder Morgan, Coca-Cola, Altria, AbbVie, Abbott Labs, Hormel, Colgate-Palmolive, Procter & Gamble, Lowe's. Home Depot's on that list also. There's a bunch more on the list that I don't have up here. Okay? Now, those are just the ones that have increased their dividends for 50 years or more. So why do you think that that's confusing? It's confusing CRF. That's not a dividend king. Okay, Rocky. We'll put CRF. We'll take a look at that if we get time. CRF. All right, if we get time, we'll take a look at it. Stocks are confusing. Sorry, Jerry. Can't help you out with that. So, are you doing covered calls or dividends? It sounds like covered call. All right, Crypto Z. I'm kind of doing both intertwined together. I'm using the dividend dates as a precursor or as a indicator as when to buy. So if Hormel is going to be on the 14th, the dividend, I want to buy it on the 26th. Okay, 2 weeks before the dividend. Why? Well, because it gives time for the stock to move coming into the dividend. And if it doesn't get into the dividend, I'll collect the dividend anyway. Do you think it's okay for me to buy O because he's scaring me? Jerry, I'm not telling you one way or the other. Okay? If you like O, buy O. I don't tell people what to do. Seriously, I don't. I was just showing you why I don't like it. It has monthlies. I can only do 12 covered calls a year, which means I can't get more than 20% out of O on an annual basis. Okay? How about CRF? Okay, I did write CRF. Thank you. You got it, Ed. No, it's leverage. All right. SER 2389. I have no idea what you mean by that. It's hard to convince the closed mind. You're absolutely correct. It is. Okay. I own REITs that pay 9% distributions. They are wonderful, although I understand my risk. There's absolutely nothing wrong with REITs. They pay me 9%. Wonderful. Okay? Now, you're getting 9% per year on your money. And you're happy with that. There's absolutely nothing wrong with that. 9% a year doesn't work for me. And it doesn't work for a lot of people. Okay? Now, I don't know why you're happy with 9%. If someone could show you how to get 20, 30, 40, 50%, why not take a look with an open mind? But if you like REITs, hey, more power to you. I don't. There's an ask for every saddle. How about CRF? We're going to take a look at CRF a little bit. Listed by MIA, IBM, FAF, and Verizon. Okay, IBM, yes. Verizon, yes. FAF, no. Sorry, but we'll take a look at those. And we already looked at IBM this evening. IBM, FAF, and what was that third one? VZ, Verizon. All right, we'll take a look at it. Okay, but not at the moment. We got a couple others before you. What are some of the real estates you own? MPW, that's the only real REIT I own. FBRT, yeah, that's going to be a no. What would you do with 800 grand to optimize passive income covered calls and or dividends? Well, 800 grand would give me about $8,000 a week. That's me. Okay, I don't need $8,000 a week, so I probably wouldn't do it as often. But like I said, that's me. And I've been doing this long enough that I have no problem with the risk that's there. Okay, I understand the dividend part, but how do you get from 5 to 6% yield a year to 50%? Josie's, is that right? Corgi Dad. Okay, Jerseys. I'll show you that in a second. Okay, but if I already have a lot of dividend gains, but I'm only getting 20% yield. Okay, 20% yield, are you happy with that? Okay, hold on. Oh, I'm missing all these questions. Oops. Corgi Dad, yeah, I don't understand it either. Jerry, you're new here. Corgi Dad, you're new here. Y'all, sorry, it glitched. Can you explain where you're buying calls? I don't buy calls. How far are the money? I don't buy them at the money. I'm selling calls. Thank you. Rick, good evening, James. How's your week? A little bit painful, but I'm getting there. Do you want them to be executed? Yes, I do. When you get the dividend, if denied to, that is correct. Are you putting 100% of your wealth into 1% per week? Mikey, awesome question. The answer is no. And let me tell you what I mean by that. I have 6 different accounts. Okay? I shared 2 of them with you. Okay? This strategy here, stay predictable, consistent 1% per week. I have 98% of my funds available for this trading strategy invested at all times. The other trading strategies, I have about 95 to 100% invested at all times. Yeah, so out of all the money I have available to me, 95 to 98% is invested at all times. Anytime. So now I do weekly options. So what does that mean? Well, by Monday, I'm back into cash again. Not 100% cash, but some cash. This week I sold Macy's and MPG. So I'll have a bunch of money to play with next week. And now I'll take some money out of that for my living expenses, and I'll dump the rest of it back into another company, probably more than likely Macy's again and MPW again, because they're just paying nicely and I like them. Okay, what page are you using for the calendar? Hold on, why MPW? Well, because the numbers look right. Do you ever have a mentor session? Yes, I do. Good evening. Hey, 86 is here. How's it going? Okay, you explained a lot about dividends, but I'm not understanding how you're getting 1% with no losses. Now, Jersey, I didn't say I didn't have any losses. I did have 1 loss this year.
Hold that thought. I was going over the numbers. Okay.
Here's my profit and loss. So this is where, that screen on YouTube comes in handy. Profit and loss year to date. Lowe's, I'm down 4,500, but I still own it. I haven't sold it yet. Remember, don't buy something you don't want to own. I had no problem with Lowe's. Number 2, never sell a loss. I have no intention whatsoever of selling Lowe's. None. Until it turns around and I'm into profit. Number 2, AEO, 4,000. I still own it. It's not a loss. Number 3, 843, Marathon. I still own it. It is not a loss. I have no intention whatsoever. Okay? Number 4, Able $636. I don't own it. I did take a loss. That's the only loss I've had all year. The next one is Bitto, down 19 bucks, but I still own it. Okay, so the 5 losses you see here, everything else is a win. Okay? All this from here down, all wins. These are the only 5 losses. But they're not losses, because out of the 5, I own 4 of them. I've only lost money once. That's it. This year. You like 3M? I like 3M also. What is going on with Walgreens? Is it bad management? Walgreens, WBA, Walgreens. Great thing you said about it. I'm going to write that down, because Walgreens finally found its bottom. WBA. We were looking at it this afternoon. Now, remember, there can only be one top, one 30-day top and one 30-day bottom. Okay? So, WBA has been sinking, sinking, and sinking. Yesterday was the bottom. Today was an up day. Okay, so yesterday was a 30-day bottom. Today it's on the upside.
All right, so where were we?
Okay, what were we looking at? Walgreens. Okay, we're going to look at Walgreens in a little bit. All right. Moderator 86. Block William Montgomery. 86. Why did you block him? He was picking on me. I was kind of enjoying it. I wanted to hear what he had to say. He didn't have anything good to say. Okay, hold on. Wait. Hold. All right. Peter Griffin. Hold on to a stock that keeps dropping. Sell covered calls the whole way down, but it's never enough. All right, Peter. To even out, let alone profit, most likely. Peter, I love people who have such closed minds. Let's check out something for a second here, Peter.
Okay, we're going to go this way. And here we go. TGP. All right, Mr. Peter, you ready for this one? All right, Peter, you ready for this? This chart we're looking at right now.
This is Target, TGT, Target.
Okay, I have in front of you 6 months worth of Target from July all the way to December.
Why? Why that time frame? Well, I'll tell you exactly why that time frame.
I bought Target in July of last year, right here. Check it out at 135.
Okay, I collected a nice premium all the way down. Like if I was 4,000 on the stock, I could only make $100 a week on covered calls, maybe less. Hey, Peter, you're not finishing. Not let me finish my. Unless there's some stocks that are higher premiums. There are plenty of stocks with higher premium. But Peter, let me finish with my example, okay, so you'll understand a little bit better.
Now, I bought Target at 135 back in July. Now, week number 1, I got 2%. Week number 2, I got 1 3/4%. Week number 3, I got 1.5%. Week number 4, 1%. And then from there, it started dropping until it finally reached the bottom. I don't even have to look at the numbers because I know exactly what it was because I was holding on to 1,000 shares at 135 and it dropped down to 102. So from 135 to 102. I saw this sucker go down. So now I have 1,000 shares at 102, and I'm selling 5 strikes out of the money. So I'm selling the 107s, the 110s, somewhere in that area. So I'm getting like a 1/4%. A 1/4% every week. She keeps going down. This slowly comes up.
Right here on the 13th of November, she closed at 112. I don't have to look at numbers because I lived the damn thing. 112. I was selling off the 117, the 115, somewhere in that area. I collected 50 cents per share. That was like 1/4%. Very next day, here you get that big old fat black swan. This thing jumped $16, blew right past my option. I lost $12,000 overnight. However,
2%, 1%, 1 3/4%, 1 1/4%, 1%, 0.5%, 0.5%, 1/4%, dividend.
So I collected 3 dividends and about 30 premiums. So by the time I get to mid-December, it comes time to sell, I basically break even with the damn thing. Okay, so I held it all that time frame. This big, huge black swan made me lose $12,000 overnight. I had no choice in that. So does it work all the time? No, it doesn't. But 95% of the time it does work. And these black swans, how often do they show up? They show up like once every 2 or 3 years. That's about it. Okay, I didn't lose money on it. Okay, I had to pay the fiddler. You dance to the music, eventually you pay the fiddler. So I lost the 12 grand, but by the time I got out in December, it was kind of like a break even. Now I did that with 3 companies last year. Target, PPG, and the other one I carried for 9 months, Kimberly-Clark. So Kimberly-Clark I carried for 9 months. That's the longest I've ever held anything in my life.
Okay, PPG and Target I held for 6 months. All 3 of them I barely broke even. All right, so yeah. So last year I didn't get my 50%. Last year I only got like 40%. Big whoop. Okay, so this year I'm well over 30% already, and not even halfway through the year yet. Okay, so Peter, we're going to go into some companies that are better off. Okay, Rick, I'm sorry, but Coca-Cola never has a good premium at all. Never, ever, ever. I've never bought Coca-Cola. I want to hear him out. I'm still holding for him to explain how to achieve 1%. All right, I'm going to show you right now. All right, Jersey. Okay, here we go, Jersey. Let's check this out. All right, we can get out of here. All right, I'm going to look at MPW. MPW. All right, Jersey, this is for you. Okay, you ready? I'm going to show you 2 of them. MPW is going for $5.06. If I buy it first thing Tuesday morning, okay, I sell someone the rights to buy it from me for exactly what I paid for it, $5.06. Selling for the 5, I'm losing 6 cents right at the top. I deduct it off of what I'm collecting as a premium, collecting 18 cents as a premium. I lose the 6 cents off of that, so I'm only collecting 12 cents. I know 12 cents doesn't sound like a lot, but let's get that calculator out. Okay, let's clear this out of there. Okay, 12 cents, and the stock is going to cost $5. Why $5 and not $5.06? Well, because I already deducted the 6 cents off of the profit. Okay, it comes to 2.4%. Do you see the number? 2.4%. That's not 1% per week. That's 2.4% per week. Okay, so where's your risk? You ready for the risk? Here it comes. Okay, number 1. Okay, remember, number 1, never buy something you do not want to own. Okay, ask yourself a question. Do I know what MPW does? Do I understand what they do? Am I okay with it? Are the dividends consistent? Is the premiums okay? Worst case scenario, okay, if the stock is below 5, I'll have to carry the stock next week, but the stock is already at 5.06. Okay, so let's take a look at the numbers. A year ago, MPW was at 8.03. The high of the year was 10.72. It's the first thing I want to see. The high of the year, the low of the year. Where was it a year ago and where is it now? Okay, so a year ago, it's on $8. It tops out at 10.72. Okay, it bottoms out in December. Okay, the bottom's right here in December, right around $3. It's a $5 stock. What are you expecting from a $5 stock? So from there, she goes up, pulls back, up, pulls back, up, pulls back, up, pulls back, up, pulls back. And here we are right now. Let's look at the last 30 days. Because the last 30 days will give me a good idea. Okay, the last 30 days gives me a good idea. Where's it going to be in the next 5 days? Why is that important? Well, if I'm buying it on a Monday or Tuesday, I want to be out by Friday. So I want to have an idea, where do I think it's going to go? Well, you get your 30-day high here on the 15th and your 30-day bottom here. So what happens from a 30-day bottom to a 30-day top? There can only be one top and one bottom. Okay, so you get your 30-day bottom over here on the 8th. 30-day top is on the 15th. She comes down, the new bottom is right here, Thursday. Okay, so if the new bottom is here, because you have the profit taking a hit, 650. It's a 650, am I in the way? 650, and then you have profit taking right up to yesterday. That's the new bottom. So we're going from there, where's she going to go? Well, she's going to go to the upside, more than likely. Is that guaranteed? No, it's not guaranteed. Let's take a look at seasonality. Seasonality tells us, what does this stock normally do this time of year? Well, the blue line, okay, the blue line here represents this year. This is what the stock has done this year so far, the blue line. The red line up here is 10 years worth of history. That's 2014, 2015, 2016, 2017, so on and so forth, up to last year. That's 10 years worth of data. I can go back and look 20 years, or I can look at 5 years. I don't think 5 years is enough, and I think 20 years is too much. So I settle on 10 years worth of data. So the last 10 years, I want to see this part right here, okay, from where we are for the next couple of weeks. There you have it. From where we are right now, the little blue dot,
okay, which represents this year's movement. This is 10 years movement. What's it going to do this time of year? Look, basically sideways. That's about it. That's all she's going to do. Okay, so is she going to jump up? No. Is she going to drop? No. Basically going to do the same exact thing as she did for the past 5, 10, 15 years. Just keep on trudging along sideways. That's awesome. So if I buy it at 504, and on Friday it's still at 504 or higher, I still make my 2.4%. That's 2.4%. Okay, you're looking for one. This one right here is 2. Let's look at another one. Let's look at Macy's. I love Macy's, and I probably will be buying Macy's again on Monday. Just to let you know. Now, Macy's. First thing I want to look at. What can I buy it for on Tuesday? 2025. The 2050 is going for 33 cents. That is more than 1%. And it's higher. It's 25 cents higher. Or I can go 25 cents lower. So I have a choice. Do I want to sell the 20, which is a higher probability of profit, or do I want to sell the 2050? It's a less probability. But still, both of them over 1%. I'm going to go for the 20 bucks. All right, so I'm losing 25 cents right off the top. So I'm only collecting 32 cents. Now, 32 cents, let's find out what that is. 0.32 divided by 20 bucks. Okay, that's 1.6%, right? You wanted to see 1% stock. I showed you a 2.4, and I just showed you a 1.6. Okay, now, Macy's is a dividend king. They've been in business for over 100 years. They've increased their dividends to the shareholders for more than 5 consecutive decades. Now, earlier this year, they had a buyout opportunity. Somebody came in, they wanted to buy them out. And they said, oh, hell no, we're not doing that. The temperature's getting hot. I can actually move the fan because when my camera's getting hot. Why does the camera freaking get on? I don't know. Okay, so, Jersey, I hope that helped you out. I'm worried about selling after money calls and having your stock called away, the stock you want. That's what I particularly want. I want to buy it at 25.20, sell off the 20s, okay? Have someone buy it from me on Friday afternoon, and then to be back into cash on Monday. What's wrong with that? I get my 1% for the week, 1% per week, 52 weeks, that's over 50% per year. Why wouldn't I want to continue to do that? Okay, 86, what are you saying? I guess 1%, yep. Yep. SR, okay, thank you for that one. SR 2389, thank you for the road. Peter Griffin, if I was 4,000 on a stock, but I can only make 100 a week on covered calls, maybe less. All right, hold on a second. $100 on $4,000 position. Sorry, Peter. $4,000 position, you get $100 a week. That's 2.5% per week. 2.5% per week, and you're complaining. Okay? 4,000 divided by 100, because 100 is your profit per week. $100 profit per week. $4,000 position. That's 2.5% per week. I don't know what you're complaining about. Okay, Rick. Again, Coca-Cola has absolutely horrible premiums. Okay, 62.08. That's what I can buy it for. The 62 is going for 39 cents. That's not even 0.5%. Why would I want to look at Coca-Cola if they're only offering 0.5%? Now, granted, 0.5% is over 25% per year if you continuously do this. Okay, Coca-Cola is a great company. Don't get me wrong. I can almost guarantee Coca-Cola is going to be making Coca-Cola another 200 years, more than likely. Okay. Let's see if this YouTube up and running again. It keeps overheating. Why is that? I have to keep a phone. I gotta keep a fan on my camera because it overheats. All right, sorry, Rick. Coca-Cola never has good premiums. Peter, I don't know what you're complaining about. 2.5% return per week is not that bad, unless there's some stocks that have higher premiums. A lot of stocks have higher premiums. What dividend yield do you look for in a stock? I don't. Peter, Do you do your name, your entries, 1,000 shares once or 100 at a time per week? Oh, Peter, good question. I take whatever is in my account. Let's say it's 100. Okay, hold on a second. Hold on a minute. Before we go much further, give me a dime so I can phone my mother. Okay, I share 2 accounts with you guys. Okay, I share 2 accounts publicly. Now this screen is live on YouTube. You sit in front of your big screen TV, watch James TV. That's what I'm gonna call it, James TV. Woohoo! Anyway, this account over here has 117,000. I started off at the beginning of the year, okay, beginning of January, 117,000. This account over here has 100,000 cash, 100,000 margin. Okay, I'm sharing 2 of them so you can see the difference between all cash and margin. Now, I do not suggest anyone do a margin account until you understand the risks. What do I mean? You can make money twice as fast, but you can also lose money twice as fast. And that money is borrowed. So when a stock goes down, you don't lose your broker's money. You lose your money. Your money gets lost first. Their money, they never lose. And they get 8 to 10% per year for borrowed money. Okay? But here's the thing. Account number 1, as of this moment, is up 27% since the beginning of the year. Account number 2 is up 56% since the beginning of the year. Okay? Every single trade is right here. Week 1, 2, 3, 4, 5, 6, 7, blah, 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 so on and so forth. You can actually check the numbers yourself. Okay, KeyBank, Target, 3M, General Motors, Ford. Here's the numbers here. Okay, here's the trades. Now, the reason why I'm doing this, in case you're wondering, is that I'm trying to create a track record because at some point in time in the future, I am going to have my own hedge fund or my own, mutual fund. So I can't legally advertise for it, but if you guys seen where it came from the beginning, then you might want to take a look at it. So if I'm averaging between 40 and 60% per year, safe, predictable, consistent, and I'm listing all my trades online so you can see them live, when it actually comes time to invest in one of my personal funds, you feel more secure about investing with me when the time comes. That's a couple of years down the line. Now, paperwork I have to go through in order to get my own fund. All right, title shares, blah, blah, blah. No. Oh, so anyway, Peter, as I was telling you, okay, when my account, okay, one account has 117, the other one has 200. Okay, it's 25%, 25%, 25%, 25%. That's if I have 4 positions. If I have 5 positions, it's 20%, 20%, 20%. I like to keep all the trades even as possible. Doesn't always get that way, but I like to do that. Sometime, somebody get James a Nexium. This is hard to revive. This is hard to, I have no idea what that means, Mike. I missed some questions. Oh, wow. I missed a lot of questions. I'm sorry, guys. I can't go all these, I can't do these questions at a time. Usually selling before dividend doesn't collect. Thank you. I don't. Thanks, that's a lot better way explained. Okay, Jersey, I hope you understand it. Buy a deep call prior to the EX date to collect the premium. I don't buy calls at all. So, SER2389 can help you with that. The reason why it doesn't work is because of time decay. Alright. I don't buy options, I sell options. Can you show us exactly what you did with Macy's this week? What did you buy and when did you sell? Oh, that's a good question there. Now, Macy's. Let's go up. Take a look at Macy's. All right, monitor. Macy's. Here we go. All right, here's my calling on Macy's. Now, I bought Macy's April 1st at 1988. Okay, a few days later, I dollar cost average down. A dollar cost average down, dollar cost average down, a dollar cost average down a bunch of time. I had money sitting around, so I was just dumping into Macy's. So eventually I ended up with 3,700 shares. Okay, my average price, $19.58. Okay,
Okay, 1988, 1855, 1949, 1978, 1850, 1848.
The average price is 1948.
So I sold the 1950s last week. I caught
1.04%. Now let me go through the numbers with you so you understand why I like Macy's so much.
So I collected $1.04. $1.04 multiplied by,
how many did I have? I had 3,700.
Okay, multiplied by 3,700, and that comes to a grand total of
$3,800 for the week. Now, my goal for this account is $1,000 per week. You see a little bit of discrepancy? My goal is only $1,000 per week, but last week, or this week, this week, I made $3,800 just on this one trade.
So let's go back and do the calculation again. $1.04 was my profit. Okay, see,
5.9, which
was last week. I sold the 1950s for
$1.04.
Okay, and what did I buy it at? What was my price? $19.58, and that comes to a grand total of
5.3%.
5.3%
for the week. So you're asking me,
why do I like Macy's?
well, I like Macy's.
What's Macy's going to do for me next week? Okay, now I don't own Macy's anymore. Okay,
I don't own Macy's because I got bought out, well, tomorrow, because options actually expire on Saturday. Not on a Friday. Friday's the last time you can actually do a trade. Okay? So, this coming up Tuesday, if I buy it at $20.25, and I sell the 20s, I can collect 56 cents.
Okay, so 56 cents. I know it doesn't sound like a lot, but when you have 3,700 shares, it kind of adds up. Okay, so 56 cents. And I'm going to subtract the 25 cents off of it, because if I buy it at $20.25 and I sell the 20s, I'm losing 25 cents. All right, so let's take the 25 cents off of it. So my profit for this week, coming up, remember, it's going to be a 4-day week, okay? Tuesday, Wednesday, Thursday, Friday. Buying at $20.25, I'm only collecting 31 cent profit. I know 31 cent profit doesn't sound like a lot, but that's 31 cents per share. Thank you for all the information. Hey, Michael, the Quest Pro, woohoo, over there. All right, so it doesn't sound like a lot, but when you have 1,000 shares, when you have 2,000 shares, when you have 4,000 shares, 5,000 shares, the numbers add up. It's over 1%. Okay, I'm going to divide it by the purchase price, $20. It comes to 1.55%. So why wouldn't I do Macy's every single week? Last week it paid me over 3%. This week it's paying me, well, this coming week will be 1.55. I got no problem. Macy's has been in business for over 100 years. They've increased their dividends every single year. Not every once in a while, every single year for more than 5 decades. So the question is, why is it not on your list? If I could write a covered call on Macy's every single week, I'm going to show you something. You guys are going to get tired of looking at this crap eventually. All right. Week number 1, Macy's. Week number 2, Macy's. Week number 3, Macy's. Week number 4, I'll pull this one up. Macy's. Week number 5, Macy's. Week number 6, Macy's. Week number 7, Macy's. Week number 8, Macy's. Week number 9, Macy's, Macy's. Week number 10, Macy's, Macy's. Week number 11. Nope, got rid of it in week number 11. All right, week number 12, 13, 14, Macy's. 15, Macy's, Macy's. 16, Macy's, Macy's. 17, Macy's, Macy's. 18, Macy's. All right, now I haven't listed up this week's yet. Okay, but you see, I like Macy's. They consistently give me a big fat premium. So why wouldn't I continually invest in them? Better yet, why don't you? Why don't you have Macy's in your Rolodex, in your account? If it's giving a consistent 1% or more every single week, you've seen how many times I bought it this year, and I'm going to continue buying it as long as they continue giving me those premiums. Mobile notary carrier, he buys shares, sells them, thanks 86. Although he has to pay the dividend. I have no idea what he's talking about. Kohl's is giving a 4% premium. All right, we're going to take a look at that one. He'll collect the dividend as he owns the shares. That is correct. Yeah, but in the money calls have already priced the dividends. Yeah, not 100%. All right. Now, when it comes to dividends, people get a lot of misconceptions about dividends. Seriously, they do. All right. I'm in the money on Macy's this week after owning it for 6 to 7 weeks. All right, Al, way to go. I was thinking about doing cash secured puts on stocks that I can chart when they are oversold. All right, Peter, that's a great idea. Trying my best to not have to buy the shares just to collect premiums if I can find one that's worth it. I hear you. All right, the money is in your pocket. It works from retail perspective. Okay. Should I buy CVS now? All right, Jose, we'll take a look at CVS. I'll write it down. CVS. Next on the list is JWN, which is Nordstrom's. Okay, Nordstrom's. Let's take a quick look at Nordstrom's, JWN. JWN. Tra-la-la, JWN. First time viewer, great delivery and powerful information. Hey, Brett, I'd really appreciate your time and energy. All right, thanks. Appreciate that. Welcome, Brett. Thanks. Thanks for, missed some. Thanks for the math on Macy's. 5.4%. Yeah, it is. Sounds like you're not a fan of Macy's. I love Macy's. Who ever said I'm not a fan of Macy's? You do 7 days out or longer on Macy's. No, I do 5 days. Okay, I buy on Monday. Now, today's Friday. Okay, all my options are going to expire tomorrow. So Monday, I'm going to have a fat chunk of change, and I'm going to have to buy 2 more positions next week. Only 2. I'm going to be looking at about 20 different companies next week, but I'm only going to pick 2. All right, so I have a bunch of people in the live trading group that we do every morning. Okay, some of them are going to be picking 1 or 2. That's it. But the stocks that I'm going to bring forward, I'll probably collect premiums from those also, and then we'll see what the numbers look like. Do I get 1% every single week? No, I don't. Okay, let's go back to that list again. Okay, let's go back to the list again, and I'll show you. It doesn't work every time. Okay, week 1, 1%, 2.1, 2.3, 2.5, 1.3, 0.85. See that? 0.85. I didn't get 1% on week number 3. I got 0.85%. Okay, over here, 1.43. Week 4, 0.9, 2.97, 2.09, 1.03, 1.006, 3.2, so on and so forth. So far this year, 4 times I got less than 1%. 4 times less than 1%. Are you taxed on regular income selling every week? Papa Breezer, believe it or not, I'm not taxed at all because my account is set up in a certain way where I don't have to pay taxes. Now, for that, your best bet is to talk to a tax strategist. Okay, a tax strategist will help you set up your account in a manner in which which is best for you. For me, mine's in a corporate account, which is tax corporate. And in corporate, you have deductions that you can take. So any profits I make are deducted from any expenses that I have. So if I don't pay any taxes, it means I didn't make any money, but I still make over 1% per year. All right, usually does the same week. Yep, usually. Let's do it. I missed some again. 7 days or longer. Yep. Income, blah, blah, blah.
I was being sarcastic. Oh, sorry, 86. Is there a list of stocks with great option premiums? Sure there is. Peter Griffin. So you personally get at least 1,000 shares or more, and you collect how much premiums on one trade? Well, each trade is usually over 1%. Okay, so if I have 20,000 in one account, I make 1% off of 20,000. That's $200. So if I have 50,000 in one account, in one position, 1% is $500. So on a $100,000 account, okay, so on this account over here, I'm looking to get $1,000 a week. Okay, I'm looking to get $1,000 a week off of this account and $1,000 a week off of this account. But this account over here is margin money, so I'm getting over 2% a week on this one because it's margin. Total different animal. Please don't do margin until you understand it. It's a lot more risk. Now, this over here, if you're okay with 50% per year, hey, more power to you. That's what we're here for. Okay, I'm here looking for people who want to join me every morning, okay, Monday, Tuesday, Wednesday, Thursday, and make trades and just watch over my shoulder as I do this consistently, week after week. Now, I've been doing this for a long time. So, but I just started recently sharing it on YouTube, Facebook, Instagram, and all those other websites. I'm just looking for a small group of people that want to get together and help each other out. So technically, I pay no taxes. That's correct. Well, neither does a whole bunch of people. You just have to, hey, that little book, what was it, 30, 40,000 pages, the IRS book, that is designed specifically so you don't have to pay taxes. You just got to figure out how to use it. Find yourself a good tax strategist who will teach you how to set up, how to set up your account, how to set up your life, your estates, your trusts, your LLCs, your corporations, your C corporation, your S corporation, tax plus, all that crap. Okay, you don't have to pay taxes if you don't want to, legally. Okay, find a tax strategist or a tax planner to help you figure it out. Okay, you going to buy Macy's? Yes, I am. I am going to buy Macy's this week. Do you own at least 100 shares to write a cover call? Yes, you do. Bradford, you got to own at least 100 shares for you to be able to write one contract. One contract equals 100 shares. Nah, I do percentage too. I just wanted to know the dollar amount of his trades. Okay. I think I told you that, but all right. What else we got? I just started the covered options. Tried 200 shares, 2 contracts, made $100. Great. Okay, that's good. $2,000 for a stock. So $100, 220. That's 5%. What you're complaining about? Bradford. If it is covered, you have to have 100 shares per contract. That's correct. Thanks. Peter Griffin, nice job. Nicely done. If you sell covered calls, stocks go down, do you continue selling weekly calls on the stock? Yeah, at that point, Hal, as soon as the stock drops below what I paid for it and what I sell the covered call against, then it's a numbers game. It is strictly a numbers game. As the stock is dropping, yeah, you can sell lower and lower strike prices, but the risk is if that stock bounces back up and goes past past the strike price that you paid, is possibility of losing. But what we do is we look at it every day. I look at it twice a day. I look at it first thing in the morning because I have a trading group that we do every morning. Okay? And then at night, I'm here teaching you guys. So yeah, I very rarely look at the stocks during the day. Okay? If I'm not actually trading or training, then I'm not doing it every day. All right, so I'm all caught up with the questions. Can we check VLO for next week? Oh, let's check it out. We have other ones to check out too, Do you wait to expire or take the profits at a certain percentage? That's a good question. And I'm going to tell you what I tell everyone. It's all about the numbers. Okay? What if I do this? What am I getting? If I do this, what am I getting? If I do this, what am I getting? Where can I best have my money and what strategy is best for that situation? It's always on a day-by-day Foot Locker. Really? You want to take a look at Foot Locker? Okay.
So we're looking at JWN, which is Nordstrom. So let's finish up with Nordstrom's, okay? 21.56. The 21.50s are going for 122. If we lose 56 cents right off the top, I'm gonna have to do the math on that one. Get my calculator out. The 21.50s, I'm losing 6 cents. So 6 cents off of that is 116. That can't be right. Please tell me that can't be right. Can that be right? Really? Take a look at it. Nordstrom's, 21.56. The 21.50s are going for $1.21. All right, so you lose 6 cents. So you take 6 cents off of that. You're making $1.16 on a $21 stock. So let's check it out. Like $1.16 divided by $21 stock comes to a grand total of 5.5. Guess what's on my list first thing Monday? All right, Tuesday. JWN. I'm writing it down and I'm circling. JWN, circling. Okay, let's take a look. You like that one, Julie? Did you see that one? 5%? Are you kidding me? Let's take a look at the chart and see what the chart tells us. Okay? Okay, so we know the number is good. Okay, first thing I always want to look at when I'm looking at a chart, okay, especially with Thinkorswim. Thinkorswim only gives me the 1 year chart to look at first. Julie C., you're right. Circle. Yes, I did. Wait, I circled it. All right. CSCO is on the list for us to take a look at tonight. But we're looking at Nordstrom's right now because Nordstrom seems to be paying out 5% next week. That's nuts. Okay, so let's take a look at the numbers. First thing I want to look at, okay, very first thing I want to see is where's the high, okay, where's the low, where was it a year ago, and where is it now? Okay, that's the first thing I want to see. High, low, where was it, where is it? It gives me an idea of the direction it's flowing. And I never want to buy at a high. Okay, I never want to buy at the high of the year, and I never want to buy at the bottom of the year. Okay, because stocks only do two things: they go up and they go down. That's all. You just arrange your buying and selling in accordance to where they are. Okay. Also, also, I do my buying and selling in accordance to the calendar. When do they have in the dividend? And that's the only time. Has nothing to do with it. Uh-oh. We got a naysayer here. 5% has nothing to do with the high and the low. I'm sorry, dude. You're going to have to come up with a better answer than that. Okay. SER 2389. You're going to have to come up with a better answer. Because we're looking at Nordstrom's. The high is here. The low is here. A year ago it was there. And today it's there. Okay. Monday morning. I should say Tuesday morning. Tuesday morning, I can buy it at 21.56. Okay. The 21.50 is going for 122. I'm losing 6 cents. No, the stock price has nothing to do. What? No, the stock price has nothing to do with the stock price. I definitely don't understand that one at all. Is CVS a good buy? We have CVS written on the list. We're going to take a look at CVS in a little bit. But right at this moment, SER 2389 is saying the stock price has nothing to do with the stock price. Nothing to do with the dividend. You're absolutely correct. The stock price has nothing to do with the dividend. I'm not disagreeing with you. I'm agreeing. Stock price has nothing to do with the dividend. Nothing at all. It's the earnings per share at the end of the year that detects how much dividends they're paying out. Okay, but let's take a look at the numbers for Nordstrom's. Nordstrom's 21.56. The 21.50s are going for $1.22. Now we're losing 6 cents right off the top. Okay, so you deduct that, so you're only making $1.16 per share. $1.16 per share on a $21 stock is a nice fat premium. Okay, what was it again? 5.5%. Okay, so the premium for Monday is 5%. I don't see why that's not on the list. Okay, so let's take a look at the numbers. Okay, back to the numbers again. Let's get this out of the way. Okay, the high is here, low is here. Okay, a year ago today, we were at 1645, the high of the year. 2353, the bottom of the year in mid-November. 1286. Okay, the last 90 days, which is the last 3 months, last 90 days. First thing I want to see is the high. Ooh, that's a tough one. The high is right here. We have a new high of the 90-day period. The low of the 90-day period way over here. All right, so let's take a look at them. $90 days ago, we were at 2041. We topped out at 2192. That was the end of February. Okay, bottomed out, got a double bottom on the 18th and 19th of March, right at 1681. All right, so the last 30 days. Here we go. Last 30 days. Oh, a couple questions. You're looking at the price at close tonight. That could change on Tuesday. You're absolutely right, Mike. Okay, until I know what the numbers are going to be, I can only go by the numbers that they give me. Okay, they will definitely change, but these are the numbers to go off of right now. All right, you're absolutely correct. Those are the only numbers available. Okay, if there are any numbers available, I would be using them. But at this moment in time, there's not. Okay, I'm using these numbers right here. Okay, the last traded price was 21.52. Okay, that's the last trade, 21.52. The bid, 21.21. The ask, 21.56. Okay, the bid is lower, the ask is higher. Those are the only numbers we can use. If we could use the last price, it's still 21.52, 21.50. Okay, then it's basically still the exact same thing. Okay, I can only go by the numbers that are available at the moment. And if the math works now, when it opens up first thing Monday morning, okay, we'll do it again. We'll just take a quick look at the numbers and make sure they're still okay. Okay, so I'm showing you how I do it. I'm not telling you to do it. I'm just showing you how I do it. I take a look at what can I buy it for. If this is what I can buy it for, well, what can I sell it for? If I'm buying it on Monday or Tuesday, what am I selling it for on Friday? 21.56, the 21.50s. I'm collecting $1.16 in premium. Okay, that's 5% return for a week. It's worth a look first thing Tuesday morning. That's all I'm saying. I'm just going to take a look at the numbers. Maybe they will, maybe they won't. Don't you think the stock is a bit high priced for 1 year? Well, we haven't got to that yet. Okay, we haven't got to that price. We haven't got to the 30-day chart yet. We got interrupted. Okay, so the 30-day chart. Okay, so now we're looking at the 30-day chart. You ready? 30 days ago, we were right over here. We opened up at 1960. Okay. About a week later, on the 1st of May, we have the bottom at 1857. Okay, right here. Right here, 1857. Then it took a couple of weeks to get to the 30-day high. And the 30-day high was on the 15th. The 15th, the high was 2210. Okay, 2210. Right now, we're at 2152. So here's a question you need to ask yourself. She comes down a little bit, and then she proceeds back up. Now, she's in an upward trend. Look at the upward trend. Okay? Now, there's an old saying. It says, the trend is your friend right up to the end. So, more than likely, it's going to continue to go up on Tuesday, Wednesday, Thursday. So, where's it going to be in the next 4 days? That's the dilemma. If everything is pointing to the upward direction, what we haven't looked at yet, we haven't looked at seasonality. How does the stock normally react this time of year? We'll want to look at that in a second. But as you can see, 30 days ago to where we are now, that is a clear upward trend. And the trend, you never fight the trend. Okay? It's going to keep going up until it finds a new 30-day high. Okay? This is the old 30-day high 2 weeks ago. Okay? We're looking for a new 30-day high. Well, when is it going to be? It's going to be Monday, Tuesday, Wednesday, Thursday, Friday. It's going to be the week after. Who knows? But let's see what the stock normally does this time of year. For that, we want to go to the seasonality. Oh, look at that. Doesn't that look lovely? The blue line, okay? The blue line represents this year's movement. Look at it. Okay? Up, pull back, up, right where we are. Now look
at the seasonality, at the 10-year average movement. Okay, she goes sideways, dips, jumps up, sideways, almost for the rest of the year. But look at where we are right now. We're at this point right here where it goes up.
So let's isolate that and take a closer look at it. Okay, that's the next 2 weeks. Let me bring it over to where it is now, right there. Okay, you see this white line? That's a straight line, and the red line goes to the upside.
So Nordstrom's, historically speaking, has a tendency to go up this time of year. Okay, and they're offering a 5% premium. Okay, granted, where are we? Hold on a second.
Let's go back to here, right here. Okay.
Okay, granted, we're in an upward trend. Okay, the high is here. She pulls back a little bit, and then she goes back up again. Okay, there is enough space between here and the 30-day high for it to, to challenge it or to continue the trend to the upside. But it always comes down. Okay, JWN's earnings come out Thursday. So here's the question you need to ask yourself. Hold on, let me read some of these. Those are the only prices I'm using. Yep. These they will change on Monday, of course. Do you think it starts to get high? Not yet. All right, we did 90 minutes so far. Great. Only need 4 more days of that trend. Yeah. JWN earnings comes out on Thursday. Yeah, I have nothing to do with that. When you say they are offering 5% premium, what does that mean? Oh, Drazek. I see you chime in way over here. Okay, well, let me show you. Okay, now, ADM and BF. Okay, so we haven't finished up here yet. Hold on a second. ADM and BF. All right. Now, so what has to happen with JWN now? JWN, you have to ask yourself that tough question. And it is a tough question. Do I like Nordstrom's? Do I like Nordstrom's enough to buy it and hold on to it? Okay, we see where it is. Right now it's in an upward trend. Okay, let's go back and tell you what has it done for the past year. Okay, look at the past year.
Okay, a year ago, she shot up, made a high in August. Okay, she dropped September, October, November, and then from November all the way up into February, it was nice to the upside. She pulls back in March, and then she shoots up again. Okay, so the question is, do I like Nordstrom's? And guess what I'm about to do? I'm about to, I already have Nordstrom's written down in circles for next week. VLO, I'm not 100% sure, VLO. 86, you want to take a look at VLO? Isn't ADM a no? Isn't that Archer Daniels? What is that? Advanced Micro Divisions. Okay, what do we have next on our list?
Kohl's. Ooh, I like Kohl's. So on my list next week, so far, is Macy's and JWN. That's so far. Okay, Kohl's, KSS. Yeah, I know VLO is Valero. Retailers are weakening. Okay, but they're still paying nice premiums.
I really don't see either one of those going out of business anytime soon. Kohl's, KSS. KSS.
All right, we're looking at Kohl's, 26.68. So the closest strike price will be the 27. Holy cow, 125. That's well over 1%. All right, VLO is on the list. All right, so let's take a look at Kohl's. Ask ourselves that question. If I could buy Kohl's at 26.80, 60, 68, the 26.50s are going for $1.46. The 27s are going for $1.27. So let's go for the 26.50s. Okay, we'll lose 18 cents. So take 18 cents off of that.
Clear that. 146, subtract the 18 cents we're about to lose. That equals that. And then we're going to divide it by the purchase price of 26 bucks.
4.9%. Really? AA. Isn't that Alcoa? AA? Alright. So, I'm writing Kohl's. KSS. Alright. I can deal with 4.9%. Really, I can. Also, an earnings released on Thursday. Okay. But you guys should know by now. For those of you who've been here for a while, you know earnings don't mean anything to me. Okay? I don't pay attention to earnings. Because I just don't. Because I've seen positive, even recently, I've seen really positive earnings and the stocks go down. It makes no sense at all. Okay, so 4.9%, I like Kohl's. All right, where are we going next? Oh, let's finish up with Kohl's. All right, let's take a look at the numbers. First thing I want to see is where's the high of the year? And this is a tough one because we get a high back here in August and we get another high here in April. All right, so let's take a look at them. A year ago, we're at 21.31. Shoots way on up to 29.65 in the beginning of August. Drops down to 17.68 in the middle of October. Finishes out the year at 29.50. Okay, and then a high again at 29.60. So 29.60, we hit it twice, but almost 3 times. Once, twice, 3 times. Okay, the recent bottom is right there on the 18th, April 18th. Oops, I need to grab another battery from my fan. Hold on 1 second. I need to grab another battery to keep my cameras cool. Ah, shit. Oh, damn it, I gotta remember not to pick up stuff. Do you think Kohl's should sell to private equity? Same with Macy's. Now, Macy's did have an offer earlier during the year. Okay, they turned it down and they said, no, we just assume buy back our own shares at 24. I think I had it at 20 at the time. I had no problem whatsoever going from 20 to 24. Really, I didn't. Why wouldn't I? But yeah, there's nothing wrong with going private equity fund. You know, if they have the money to buy them out and corporate says okay. But, you know, you got to take into consideration the families that own those companies. Are they privately held families, or are they still, you know, corporate? You know, some of the family members still own it. All right, but that's neither here nor there. So let's finish taking a look at Kohl's. Okay, so the last 90 days. 90 days ago, we were at 27.69. We topped out at 29.60 on the beginning of April. Okay, and on the 18th, we're down to 21.45. Now, the last 30 days, okay, here we are for the last 30 days. Total different picture. See it? Totally different picture. 30 days ago, we're on 25. We got like a triple bottom. Check out the triple bottom we got. Okay, hit it 3 times. The 25th, it was at 23.43. The 1st of May, 23.43. And the 8th of May, 23.44. Okay, so we basically know what the bottom is, because if it was going to go lower, it would have went lower. It hit it 3 times in the past 30 days. So we know what the bottom is. Look where it is now, 26.49. A nice up from where we are, but look what the high is. It looks like 28.50, doesn't it? 28.25. Okay, so you have the high up here, and we're right here. Look at the trend. Again, the trend is going towards the upside. Okay, so let's take a look at seasonality. What does that tell us?
Okay, the next 3 weeks. Okay, here we are right here where the blue dot is. Okay, it's going to go sideways for a little bit, and she's going to go to the upside in the next 2 or 3 weeks. So, why wouldn't I do calls? Calls is only $25, free money. Yep, I like it, Mikey. What do you think about Trane Technologies? Felix, how are you today? Do you think coal should sell price? Okay, same thing. All right, I already answered that question. Felix, if you could do me a favor and send me the ticker symbol, because I've never heard of Trane Technologies, unless you're talking about Trane, the air conditioners. Those are the only trains that I know of. But usually if I say I've never heard of it, it's usually going to be a no. Sorry. But yeah, I like Kohl's, I like Macy's, I like Nordstrom's for next week. I like all three of them. All right, so anyway, let's get back to where we were. Next on our list, we looked at Macy's, we looked at MPW, Cisco, CSCO, DSCO. Okay, so Cisco, CSCO, 4639, 4650s, 27. Yeah, the numbers just don't work. Sorry. Why do you think? What do you think? Okay, all right. Felix, you got to tell me what the ticker symbol is for Trane Technologies. I don't know. I've never heard of them. Okay, so I've been doing this for a long time. There's only certain stocks that I do. Only certain stocks I do. Now there's 9,516 companies available. Out of those 9,516, the reason why I know that number because last week we looked it up. TT, huh? Okay, last week we looked up 9,516 companies. Out of that, only about 250 make my list. 250, 300, somewhere in that area. TT, huh? Big fat no. 2 reasons. Reason number 1, it's a monthly. I don't do monthlies. They don't pay enough. Reason number 2, all-time high. Yeah, that's like standing on a ladder waiting for someone to come and give you a new ladder. What's your take on Newmont? NEM? Ooh, I like NEM. See, I knew that one right off the top of my head. NEM. Hey, save me, NEM. Save me. 4208. 42, 60 bucks. 60 cents. Over 1%. Okay? That's what I looked for. Over 1%. So let's take a look at Newmont. All right, so here's the numbers. First thing I want to see is the chart. Where's the high? Where's the low? Where was it a year ago? And where is it today? That's the 1 year chart. It looks okay. So let's look at the 90-day. Last 90 days. Here we go. Look at that. You really can't misinterpret that. 90 days ago, we're way down here at the 2950 area. And nice run up all the way up to 4450 area right there. Nice run up. Look at it. It goes up, pulls back up, pull 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 back. That's all it does. What is it doing now? Look, the high's right here. It pulled back 3 days. Okay, the bottom right there, 1 day to the upside. Tuesday, if it's green, okay, if it's an update on Tuesday, that's 2 updates in a row. That's the time to jump in, and you'll get you more than 1%. What exactly is it this week? The 42 is going for 60 cents. I'm losing 8 cents up the top, so I'm collecting 52. Claire, 52 cents divided by the purchase price of 42 gives me a grand total of 1.23% for the week. Okay, you guys wanted to see 1% trades. I've showed you about 6 or 7 of them so far. Newmont, if you know who Newmont is, if you like Newmont, those are the numbers. 1.23% for Tuesday, if you like it. So I will write that one down also. NEM. Save me, NEM. All right, so Nike. Let's take a look at Nike. CSCO to know. Nike, NKE. NKE. 91.90. So 190. So we're looking at the 92s. The 92s are going for 81. Sorry, Delont doesn't make it. Sorry, you asked. Nike doesn't make it. Costco. Now, I'm pretty sure Costco is a no. C-O-S-T. Yeah. Costco's a no for a couple of reasons. Reason number one is $800. I don't do stocks over $300. Usually $250, but $300 is definitely no. What software are you using to show all this data? Brett, good question. It's not software. It is actually a trading platform called Thinkorswim. It's offered for free through Charles Schwab. So you go up account Charles Schwab, download this onto your computer. There's all the charts over here. You can. There's so much, dude. Seriously, there's so much you can do with Thinkorswim. It's unbelievable. It was created by Tom Sosness about 20, 30 years ago. He sold it to TD Ameritrade. TD Ameritrade got bought out by Thinkorswim. TD Ameritrade got bought out by Charles Schwab. So Charles Schwab owns it now. Check HUT. Really? HUT. H-U-T as in Jabba. Jabba. The HUT. $9.40. Okay. HUT 8 Corp. Now, I've never heard of HUT before. What about Walmart? Oh, HUT has no dividends? Wow. So much. I was going to go to that next. Seriously. I was going to go to Yahoo Finance. Okay, Yahoo Finance and see what kind of dividends they paid out. But 86 said they don't do dividends, so HUT is going to be a no. Even though the numbers look pretty damn good. Okay, the numbers look good. But if and when the stocks go down, what do you mean go down? Well, look. July, you got that peak at 22, and then it comes down to 9, and then it goes up to 18, and then it comes down to 6, and then it goes up to 12, and then it comes down to 7. What happens when the stock comes down? If they do not pay dividends, what am I collecting? I'm collecting absolutely nothing. And how do I know when the stock's going to move up? I look at stocks just before the EX date, because the EX date tells me the stock is getting ready to pay a dividend. And when they pay a dividend, the stocks have a tendency to move up. So I already know the stock is going to move before the dividend. That's why I look at the calendar. I base all my trades off of the calendar. Okay, so let's go to, what is today's date? April, May. So we're looking at the first week of June. All right, June 2024. Okay, this is June 2024. Okay, now usually Thinkorswim doesn't have them all filled out, so every once in a while I have to use June 2023 because the stocks pay same thing year after year after year. So 2023, there we go. Yeah, same thing. So let's go into a better list. That's the Dividend Kings. There's only 4 Dividend Kings this month. All right, check that out. This is my 100-year-old list. Companies that are about 100 years old. GLW. Oh, what's that? Corning? GLW Corning? I think so. Corning, yeah. I was right. Corning. All right, so we got Corning, eBay, NEM, which is Newmont, Bank of America, Baxter, General Motors, Pepsi, Waste Management, KHE, which is Heinz Ketchup, Kraft Heinz, Halliburton, Kimberly-Clark, Occidental Petroleum, VFC. Come on, you guys heard of all these companies before. All right? Hey, we're below 60, so let's reboot and get a bunch more people here. Hold on a second. Don't go anywhere. All right, let's try this one more time. Okay, so you guys start signing in. We got some people over here on Instagram, Facebook. Only got a couple people over there, and a couple people on YouTube. More people on TikTok.
Why do I want to ban TikTok? It's so many people watching TikTok as opposed to the other ones. Paul, how's it going? Welcome on back, everyone. Welcome back. All right, so let's get started again. Now, the reason why I like to reboot, because once you get down to a certain level, then you reboot and you attract more people coming in. Okay? So I think we got another half hour to go anyway. Judy, Nick, Brett, how you guys doing? Scott, Box Pilot, you're new here. I would have gotten that name before. Wade, Leo, what's happening, Leo? Mike Landry, ooh, Mike Landry. Oh, I was thinking Mike Lowry. Mike Landry. Check GPS. The gap. All right, let's go check GPS. What do we think? GPS, the gap. All right, the gap. 21.22. 21s are going for 148. Holy cow. And I like the chart too. All right. So the 21s, 21.50s even. Either one, I'd go for the 21s. So let's take a look at the 21s. I've been here before. Oh, Box Pilot. That name doesn't really sound that in that. Okay. Is Twitcher good to buy? I honestly couldn't tell you. You know stocks is a scam and makes nothing. Yes, I do X System X31. Thank you for sharing that. I'm going to sleep better tonight just knowing that all this is for nothing. Anyway, Twitter's delisted, yeah. All right, so GPS, the gap. The last trade is 2098, the bid 2090, the ask 2122. So more than likely, I'm going to go with 21. That's going to be $1.48. So what does that mean? $1.48. I'm losing 22 cents right off the top, so I'm getting $1.26. $1.26 on a $21 stock. Are you freaking kidding me? And I even like the chart. So guess what I'm doing with the gap? GPS. Written down and circled. All right, let's check out the numbers. Okay, first thing I want to look at is the one-year chart. Here's the high, here's the low, here's where it was, here's where it is. I like it. So let's take a look at the 90-day. The 90-day goes all the way into here. Okay, so the last 90 days. Here's the high here, here's the low here, here's where it was, and here's where it is. I like those numbers too. They look great. So now I want to take a look at the last 30 days. So the last 30 days, right about here. Now, total different picture. Do you see the total different picture? Check it out. 30 days ago, we opened up at 2097. The very next day was the bottom of the 30-day time frame. That was on the 25th, and the bottom was 1965. Now from there, she goes up, pulls back, up, find the 30-day top, pulls back. That's a new bottom, not a new 30-day bottom, but a new bottom right there at 2050. 1 day up, 2 days up. Monday or Tuesday is definitely going to be, what do you call it? Tuesday is definitely, hey, come buy me. Buy me. One of those types of scenarios. But let's take a look at seasonality to see what this thing normally does this time of year. Now, hypothetically speaking, this thing should go up for the next couple of weeks. All right, I can deal with that. I like the gap. Okay, all those sound nice, fine, and dandy. Okay, so what do we want to do next? All right. Next on the list is Hormel. I think the line is inverting. Okay, Jose, thank you for that. Next on the list is Hormel. Hormel's a dividend king. Wow, 31 people, really? Hold that thought for 1 second. Alrighty. So, next on our list is going to be Hormel. HRL. Hormel. First thing I want to check, always, first thing I want to check, what can I buy it for? First thing Tuesday morning. 35.68. The 35.50s are going for 70 cents. Take off 18 cents. I'm still making more than 1%. Hormel, more than 1%. Hormel is a dividend king. They have been in business for over 100 years. Over 100 years they've been in business. They've consistently increased their dividends to their shareholders for more than 5 decades. 5 decades increasing their dividends consistently over and over and over again. It's Friday night, not a whole lot of people here, so we're gonna cut out early. Okay.
So that's Hormel. Let's take a look at the numbers. Here's the high. Got a triple top.
Okay, a year ago, do you see that? Triple top a year ago. If it was going to go higher, it would have. It's not going to go very much higher than 41.5. Okay, hit it 3 times. Okay, the bottom, right down here, 28.50. That was back in February. Okay, last 30 days. Okay, take a look at the last 30 days. How can you go wrong here? 30 days ago, we had our 30-day bottom. Actually, we have a double bottom. Okay, 34.61 30 days ago. On the 6th of May, 34.59. Pretty much the same number. Now we come over here and we have Thursday's bottom, 34.70. And then Friday, today was an update. Look at your 30-day high. That was Monday. Monday was the high. Thursday's your bottom. So what do you think is going to happen on Tuesday? Okay, this thing should be going to the upside on Tuesday, and it's paying out more than 1%. Hey, an idea, you should put the camera the other way so it comes left to right for us as listeners. Hey, Gurdeep, let me just explain to you roughly why it is the way it is. Number one, I got 5 cameras. This camera's going one direction, that camera's going one direction, that camera's going one direction, that camera's going one direction. They're all going the exact same way. This camera here is the only one capable of inverting through TikTok, which means this thing will be backwards to me, but it'll be forwards for you guys. That's why this right here is live on YouTube at this moment in time. So even if I change it, watch, if I change it, here you go, let me change it real quick, just for you to get an idea. Okay, now it looks right for you guys, correct? But can you see these numbers? Can you see that says 80 cents and this one says 75, 70? Can you see those numbers? No, you probably can't see them because they're so damn freaking small. That's why this screen right here is live on YouTube, so you can look at them easier. However, it drives me up a wall when camera's going one direction and this camera's going the other direction. That's why I keep them all going the exact same direction, because I have ADD and I was one of those children of, what do you call that weird shit back in the 70s and 80s? Experimental. What were guinea pigs back in the 70s and 80s? You broke your collarbone. No, just this one. I broke it twice. I broke it when I was 18. I broke it here when I was 18, and I broke it here 2 weeks ago. It's a little uncomfortable, but I do have most of my movement back. I just can't lift anything. I can't really do anything. Joke. Okay, yeah, okay, that's funny, Al. I gotta get used to your weird sense of humor, because you always come up with some doozies once in a while. Alright, so we're basically thinking of calling it a night. Because we're at 11:20, we only got 33 people here. Not a whole hell of a lot. Yeah, so tomorrow's another night. Today's Friday. It is what it is. You guys have a great day, and we'll catch you again tomorrow. Good night. night there, Miss Julie. You look great, and I appreciate your education you started. Well, I'm going to be here every night. I've been here since the beginning of January. I've only missed 2 nights so far, and I made a commitment to do every night for a whole year. See if I can do it every night for a whole year. So as long as you guys are decent and not rude, I'll be back every night. Why not? I actually enjoy this. This is my retirement, so I'm having fun. Alright, all that being said, let's get the cameras put away. I gotta figure out why the hell this freaking computer, this phone overheats. Mighty KC, you're learning a lot. KC, don't listen to what everyone tells you. Do your own research. There are ways of coming up with it. Starting time every night, Brett, 9 p.m. Well, between 9 and 9:30. Sometimes it's earlier, sometimes it's later. But I try to do the same one. Mahalo, my brother. Ooh, mahalo to you too. Mahalo. All right. You guys have a great day. I'll see you again tomorrow night. Dividend investing for weekly cash flow using nothing but pre-qualified dividend stock symbols. Companies that increased their dividends for more than 20 consecutive years. 2 year share